Good morning, traders. It's 8:03 a.m. Chicago time on the 20th of December, 2017. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we're seeing crude oil higher again. 57.85 is the trade, up 0.49%. RBOB's up over 1%. Followed by the indices. The indices have been creeping up all night after yesterday's sell-off. Interesting movement yesterday. Unexpected. Well, it was a low probability that we would drop off, but again, driven by news. The laggards today are is the U.S. The U.S. Treasury bond down 0.39%, down 19 ticks. Followed by the DAX again, getting hammered a little bit. Actually, not too bad. Hammered's a strong word. Down 51 points, or 0.38%. Just overall, mixed bag. We're looking at the Russell up 0.42 and the S&P up 9 points, 0.34%, trading inside of the prior day's range. We've taken back some of yesterday's sell-off, trading inside of the range across the Russell and the S&P so far, and others. As far as what we're expecting, there's a fair amount of news overnight. I invite you to just make sure you're aware of what's surrounding us. The tax bill is the biggest thing. Republicans passed the tax bill 51 to 48. It looks like one was abstaining. Along party lines, there's a technical vote left in the House, and then it goes to the president and gets signed into law. The other thing is that the 10 years hit a 9-month high at 2.46% on the yield today. This high has not been hit since March. For those of you who follow crypto, again, this is not a crypto broadcast, but I'm going to tell you that that's a trade that I'm definitely looking at, and it's a new market that I'm going to continue to talk about more and more. It's where volatility is, and I go where volatility is. Litecoin's founder unloads his entire stake in Litecoin. Litecoin, I believe, was the 4th largest cryptocurrency, and it dropped off. I think Ripple took its spot. And overall, Charlie Lee, the founder of that currency, has sold his entire stake and donated it to charity, according to his remarks on Reddit, I believe. There was also a big move overnight in Bitcoin. Bitcoin dropped to 14,000. Remember, it got to 19,840 or so, 19,840. It dropped to 14,000 in what looked like a flash crash. With Bitcoin Cash launching at the same time and being shut off on Coinbase after 4 hours of trading. Lots of disturbance in the crypto force last night. So that's what we have. The markets in Europe are mixed. As far as what we're looking for today, what's ahead of us, there were some releases overnight. Again, you can look those up, but what's ahead that could interfere with, that could impact our trade is 10 o'clock existing home sales in the U.S. for November, looking for 5.53. The prior's 5.48. And then we get crude oil inventories at 10:30 Eastern. The expectation is a draw of 3.15 million barrels. Distillate inventories, a surplus of 250. And gasoline inventories, a surplus of 2.45 million. That's what's on deck for today. Here's what we expected yesterday, and we'll talk about what we actually got. Change the color of my pen here. There we go. So yesterday, following on the normal footsteps of what we expect the auction to do in the context that we're in. What is the context that we're in? We're in a raging bull trend overall on the weekly, on the daily, and we're gapping up a relatively large gap, 2682 to 2692.50, 10 points. Put that on a statistical probability chart, and you get a relatively low single digit or very low double digit probability of closing historically over a large sample of those gaps. Actually, the sample is not that large, but it's large enough for a high confidence interval. So the expectation is we're not likely to close that 2682. So the key trade of the day, the primary scenario, becomes responsive selling into balance on a day that was very compact on Monday. And then the expectation is for that balance to break to the upside, continue higher to 2700, get stuck there, push through, and then sell off into the close. None of that happened. None of that happened. Again, news driving the auction in this product, as it represents a huge segment of our economy. The secondary scenario is a push through the high. Remember, the overnight auction was geared and wound up to likely break to the upside. So the expectation is we push through the high, we fail, and then we start to move down into the gap zone, expecting gap mid 2687.25 for a bounce on the first test. That didn't, this kind of happened, but it's not quite the way we see it on this chart. So that trade was off. There was not an opportunity early on for the market to push higher for us to sell against, as I've shown in the past how I would do that. Here's what actually happened. What we have is basically a market that went into a drive, not a very strong drive, but a drive nonetheless. You see that there was no swing on the open. It did not pause until 2690 from a high of 2697.50. There was selling on the open. Let me show you that. Here we go. Let's go back to the beginning. Here's what it looked like coming in. Let me switch to the bookmap page. Here's what it looked like when we first came in. Right, very little showing on the bid. Not too much participation on both sides, but it just continued to drift down. You could see the sellers down here with the cumulative volume delta, just getting hit all the way down this green line. Many more crossing the bid to hit the bid, crossing the market to hit the bid all the way down. Then we get into this area where you see this volume start coming in, this bid volume start coming in at 2690 that holds, and that becomes our bounce point. See this right here. From this point onwards, from this point down, you should be able to see the depth, and then the depth starts creeping in, and we see that there's a large bid here that just held steady, the white line, and that becomes our initial bounce point, and we start to move back to the collision area. See this collision area right here? Large bid comes in, holds steady, does not fade. This is too thin, and let me use a different color. So you see this bid coming in here, and it's not going from white to gray to black, as in bids canceling, spoofing the market. It holds steady, and you have a collision zone right here. That collision zone pushes to the next strong bid area, bounces back up. There's a test of this lower collision bid earlier, and there's a test of the higher collision bid that we had earlier. This is a typical typical behavior of the market. I've seen this for the last maybe 15 years trading order flow as a professional. So here it is. It pushes back through. You see that? That's the first opportunity right there. From an order flow perspective, this here is the first opportunity to catch a short in the direction of the trend from the way that I trade. I cannot predict an open drive down, so I don't chase it. I don't follow the market down and leave myself open to a large loss if it reverses. And then it pushes down. Where does it push down to? You see this gray area here become more and more and more bright as price moves down. And the bid gets brighter. What you have there is the potential for serious participants coming into the market. How much was there? All we have to do is scroll back. This is the beauty of the software. All I have to do is scroll back, and I can see exactly what was offered. So at this exact point, this is what the book looked like. Okay, so as I shift this forward, you can see how the book changed in that area, and I can replay the exact scenario of what the market looked like at that point. So this is a very important training tool, but overall, that's what the book looked like. It just did not have any persistence on the bid, and so overall, didn't see a very good opportunity to get anything on. Then we finally break through and have a range extension through the IB low. The IB here not as incredibly important as it normally is, because the IB basically kicks in at 9:30 Central, 10:30 Eastern, so after the first hour trading. But the auction to the downside was not really complete. Okay, and so the first pullback we get is into the prior day's low, and then we just hold sideways here against the opening swing low, VWAP, and then backed up a little bit by the prior day's low for continuation. And then the market has basically what is a B-shaped profile. Imagine it on this side, a B-shaped profile, and that's long liquidation, but it's a struggle. Look at how much volume has gone through on this liquidation. There are buyers fighting this on the way down, as we see in the book down here, as we see in the bids down on in the book. As it moves down, there's a lot of white coming in, meaning relatively high volume on the bid that is getting hit. Okay, do you all follow this? I'm telling you the story, not because I like to hear myself speak, but I want you to have a more practical view rather than theory. There's a lot of theory out there. There are many people who get online and go through the history in the rear view mirror, and that's really not what I'm interested in, because we can't make money off of that. I'm interested in what things look like at that moment that we can potentially take advantage of. And then from since the overnight, if we look again at the overall depth, from the overnight session, all we've done is drift up. So there's, of course, volume drops off. Okay, so all this white area up here is just the volume being carried from the prior day. So it's relatively higher than what we would see on overnight in the depth, and that's what this software is using to create a gradient on the depth. So as soon as that shifts off screen, we can see that it's just drifting up higher and higher and higher. And so as I expand this out, you can see what areas actually had the greater depth, and overall the volume was fairly anemic overnight. There's not much here to lean on as far as a trade. The overnight volume is in line with what is normal, 115,000 traded so far since the reopen at 3:30 Central, 4:30 Eastern until now. So everything outside of the pit session has traded a fair amount of volume on this rally up. What is the cause of that drop? Not that it matters for us at this point, but there was an issue. We have two things going on with our government, with the U.S. government right now, that's kind of pushing things around. We have that tax bill, right, which ran into several stumbles and several things, with various senators backing off their, withholding their vote until they get what they believe should be in there. In the case of some senators, they needed stuff that somehow snuck in there that unfortunately shows a conflict of interest. But they did end up getting the package done. But at the same time, we have this big issue with funding the government. The government does not have funding, to continue to operate through next year. And so there was a threat that it would not likely, if this bill passes, it would not likely to get the funding votes, and that caused us to start to stumble. So that started early in the morning, that discussion, and then Cohen came in this morning. The Secretary of the Treasury came in this morning saying that they will have a 2-week bill to fund through January 19th while they work out the budget for next year. And that's been the theme all night and this morning. Okay, it started to drift up. And so what this is doing is it's responding to a lot of financial politics that are going on here in the U.S. Look at where we went yesterday. This is how the auction, this is how my faith in the auction is consistently reinforced. We push all the way down, and where do we stop? Right at the gap zone low. Remember this gap zone from Monday? And I talked about on Hypo 2, the potential for it to push down and bounce on the mid. Now the move down was very strong yesterday, but that's a slanted line. There's the mid of the gap zone. We stopped there. We stopped there for a pullback, then we consolidated in the mid, and then we ended up pushing all the way down to the low, to the tick, as we re-auction this area. So what is the auction explanation for this? This is a completely unauctioned area in the day session on new all-time highs. This area has never been auctioned before, which means that prices have never been checked in this zone. And what we did yesterday is we checked the prices in that zone, and we formed this very strong balance shape profile, and we're bouncing off of that gap zone low. This is why I track gap zones, and not just gap close, but the gap zone. A gap zone is simply an area that's never been tested, and it's likely to be tested. Once we break in, it's likely to be tested to the mid. If we hold in that area and start to balance, then it's likely to continue through to the other side. So if I'm short, I'm looking to scale out ahead of the mid to secure some risk and get a better theoretical average. And then I'm looking to hold to see if it breaks through and continues to the other side. And then I'm looking to scale out some more ahead of the low of the gap zone. And that's why it's on the chart. Okay, pretty methodical process there yesterday. What have we seen overnight? Overnight, again, pretty good volume, right? So we're at 124,000 now. A clear channel going up, very strong, and we continue higher. We're coming back into the balance area that we've had since Monday, and we're starting to drift towards that. So I expect us back at 26.94 around the open, and we are back in balance. And so the market is likely to spend a fair amount of time today holding steady in this area. If any news comes out on this tax bill for any reason at this point, it's passed the House, the U.S. House of Representatives. It passed the Senate last night, and the way a bill becomes law is it gets debated in the House. In the Senate, it gets reconciled. Both the House and the Senate have to vote for it. Majority vote wins. Simple majority wins. Then the Senate passes the bill on to the president, who can veto it. or line item veto it, veto portions of it that he doesn't like, which he's not going to do. And then as soon as he signs it, it becomes law. And then it goes into effect per whatever the bill says when it goes into effect. Okay. So we're at that phase, the final phase, where this tax bill becomes law here until another legislative body changes it. So what are we expecting today? This morning, I'm looking for this to continue higher. I'm looking for a small pullback. I'm looking for new all-time highs. I'm looking for us to basically do what we expected yesterday on the primary scenario, push through to 2,700, bounce around 2,700 for a bit, and then consolidate, pop up, and then push down on the close. I don't anticipate any interruptions except for news. Anything that has anything to do with the tax bill, anything that has anything to do with the debt limit and funding the government, those things are going to have an impact on our trade. Other than that, if all is left as is right now, we're likely to continue to drift higher and to go to 2,700 and beyond. So that's how things look right now. Bad news, push early, impulse down, consolidate, push down into the mid of the gap again, and hold steady here. I don't expect much selling at all today. I don't see a huge probability of a market continuing lower. It has not done so. It has not done so in the past. Every dip gets bought so far because of all the good news that's coming. Earnings are expected to continue to rise again with this tax bill. Remember, the reason this tax bill is huge is because it puts more money in corporate pockets or repatriates funds to the U.S. because now the tax rate becomes more competitive with foreign governments like Ireland and so on. So money comes back and it gets reinvested in the company. They buy shares with it or pay down debt, which has the overall effect of improving earnings. And we're trading a product here that is based on earnings or should be based on earnings. And so we're expecting those to continue to rise through 2018. And so there's very little here that the market can sell off on. Or is available for the market to price in on the downside. And the way things are shaping up here on the open, if you look at the order flow here, there's just little here that's likely to drive us lower. But again, scenario number 2 is designed to take care of that. Okay, in case that happens, I know what to look for, I know what to target, and then I'm using S5 Bookmap here to place my orders and to lean against market participation. That's it. Good luck today, and I'll catch you tomorrow. Sorry it was a long one. Take care.